Um, bro, hello.
Yeah,
Last time,
I can hear you.
uh, um, last time you sent me the screenshot, the screenshots, right? And
Yeah.
where did you? Oh, it was they were here. We can pass through them first before we proceed. Before we proceed,
Okay.
I didn't see any problem in any of these analysis you made. I think everything was perfect. Okay, like from here, this structure retest was correct. Even this structure retest here down, they were all correct. Um,
Okay.
even this invalidation and this new invalidation, it was also correct. Also, that invalidation was also correct, and also that breaking retest was correct. I passed through. I passed through
Validation.
all of them, and they were all correct. So I think you already mastered about the invalidation, new invalidation X, break-in retest. I
Break and retest.
Yeah, I think only took those lessons, right? Or there's something else. And also
You see?
structure, yeah, and also structure retest. So today we are going to look after hidden something something we call hidden structure. Hidden structure.
Hidden structure.
Yeah. And I think it will be better if we start with hidden invalidation. Then after hidden invalidation, we are going to look at our hidden structure. We've remained with only two structures to look for, to check out. Okay, let's start with hidden structure. No, I mean hidden invalidation. Hidden invalidation. So
Okay.
yeah, let's say we're in a downtrend or in a downtrend, and let's say we're in a downtrend. Um, let me let me make this thing more clear. Let's say we're in a downtrend, then
Okay.
yeah, then the market breaks our structure, our our breaking retest structure. So like this is our breaking retest structure. We are anticipating price to move, to come and retest, market to move, to come and retest this structure to make a continuation to the
Yeah.
create a new low.
Downside.
Yeah. So there is something we call hidden invalidation, whereby our hidden invalidation it's usually here. It's our hidden invalidation, and sometimes we might get two hidden invalidations. You might get the first hidden invalidation and the second hidden invalidation, but most of the time price the first hidden invalidation is more accurate more than the second hidden invalidation. That means like the
Okay.
price has the tend to retest um, um, many times on the hidden invalidation, on the first hidden invalidation more than the
Hidden
second hidden
validation.
invalidation.
Okay.
So like what we'll be anticipating, we'll be anticipating for the price to come and break this structure retest, then to go and retest our hidden invalidation to make a continuation to create a more low on the downtrend. Have you got the point there?
Have I?
Have you got the point?
Yes, yes, perfectly clear.
Okay, bro. Okay, let's proceed. That's an example on the downtrend. Let's try to look at the uptrend. However, vice versa is true. So let's say we are creating higher highs, then price. um, let's say we're in an uptrend. Then the market creates something like this. Then price breaks structure. After price breaking this structure, we usually anticipate for the price to come and retest this break and retest structure to continue to make a continuation on this trend. And but most of the time, we usually consider our
First hidden invalidation.
hidden invalidation, whereby price will be anticipating for the price to create a pullback to come to break and retest structure and retest our hidden invalidation to make a new high on the uptrend. Okay, let's go through the charts and try to look for more examples. Okay, we have an example right here. We have an example right here. Um, the market broke our break and retest structure. Then price went to respect our our hidden invalidation, whereby it was more risky if someone took a trade on the break and retest structure, and it was less risky if someone took this trade on the hidden invalidation. So
Yes.
let's look for more
So in
examples.
this case, where would the SL be? The stop loss. The stop loss for such hidden invalidation.
Oh, okay. We are going to look at the stop losses when we reach to the risk management topic, whereby I will show you where we are going to put our take profits and where our stop loss should be. Whereby in some circumstances our stop loss should be more than 10 pips, 15 pips, and there's some circumstances whereby like our stop loss should be even something like 5 pips to 10 to 15 pips. So I'll show you. I'll show you. Yeah. Right now, let's deal with the structures first.
Okay.
Okay, so we also have another example right here. Price broke this structure. Price broke our structure right here. This was the structure
Okay.
breakout. Then after the structure breakout, price reversed and broke our breaking retest structure. And price went to take this trade here up at our hidden invalidation. At our hidden invalidation. Also right here. I think this could be somehow more complicated to you. Well, let's go to the
Okay.
let me see. There's some things like I you have to have the knowledge of the whole strategy to um for someone to understand something on this example right here. But let me try my best to make you understand. Okay, on this case right here, in this case right here, this was a break-in retest structure,
Yes.
and this was our first anticipation of our hidden invalidation, and this was the second
Validation.
anticipation of the hidden invalidation. So the price went to retest on the second, on the second anticipation we had.
But this your line now is on the week of the second evaluation. I thought we usually use the body.
Yeah, like that's why I told you it will be somehow complicated. There's a way like when we reach in our top-down analysis, I'll show you. Like it's not like when we take
Okay.
trades, let's say, okay, we usually take trades from higher time frames, but our entries are usually on lower time frames. So okay, I'll show you. I'll show you.
Okay.
I'll show. Let me just give you an example right here, because I think we are going to talk about this thing today. Let's say let's let me look for a nice example. Let's talk about this structurality right here. Now let's let's try this example. This is our structure test. We are on the 4-hour time frame, right?
Okay.
we are on the 4-hour time frame. We are looking where price went to retest this structure here. And when you are making analysis, when you are anticipating anything, maybe it's an invalidation, structure retest, or anything like that. So this line, like when you're just starting to make your analysis, you have to make it on the week. Then after putting this line on the week, you have to go on the lower time frame. Let's say 1 hour. Most of my entries are in 1 hour and 30 minutes. Most of them. Let's say it's on the 1 hour. After reaching the 1 hour time frame, that's when I squeeze my anticipation to the body. You get the point. When I reach in lower time frame, that's when I put my anticipation to the body. That means like my trades. I'm going to take my trades on this point. I'm going to take my trades on this point. And there are some trades that I even go to lower time frames, like 30 minutes. Let's say 30 minutes. And the more you go in lower time frames, the more your entry becomes more. Less risky. It becomes more sniped.
Accurate.
Yeah, and more accurate. Like here, we've gone to a lower time frame, and it's telling us like our entry is supposed to be above, like somewhere here. We get, and we can even go to even lower time frames, like let's say 15 minutes, and you can find that our entry is even getting less and less and less riskier. That means our stop loss will be more uh will be uh will be
Lighter.
minimizing it. Yeah, and it will be better than someone who's taking his trade
But
in the
but but sometimes when you go to lower time
time
frames low,
frames.
wouldn't you like miss the trade?
Yeah, sometimes you miss the trades. Sometimes you miss the trades, and that's why I usually end in the 1 hour time frame. And if I go too deep, I usually end on the 30 minutes. I don't usually go to 15 minutes time frames unless I'm looking for something called a re-entry. I will show you what's a re-entry. I will show you what I think we are going too fast. Let's deal with the structures first. Let's deal with the structures
Okay.
first. Then yeah, we are talking about hidden uh, hidden invalidation. Um, I think here is another example. Hidden invalidation. It's right here. This is our structure retest,
Okay.
and this
This
is
15
our
minutes.
yeah. These are just examples. I want you to
Okay.
know the structures first. These structures can happen in any time frame, but like for more accuracy, I usually trade these structures according to higher time frames. I don't do lower time frames. So let's say here, this is our break and retest structure. So if I took my trade here, it would have been more riskier. But if I would have taken my trade here, it would have been even less riskier. And I could have even got two to three entries. Like this, the first entry. This is the second entry. Let's see if this could be the our third entry. No, price didn't respect it. Price didn't respect. So have you have you got the point? We can so that we can proceed, or if you have any question, you can ask.
Oh, okay. So you said whenever there's a break of structure,
Uh-huh.
yes,
Yeah.
price goes back to the hidden invalidation.
Yeah.
To but the hidden invalidation is like a normal invalidation that fails, that didn't work well or something like that.
Yeah. Of course, it's like a normal invalidation. It is, yeah, it's a normal invalidation, but the way we are taking it straight, we are taking it in a reversal way. You get,
Yes.
like,
So now like this one, the trade is at the tip of the your entry is at the tip of the body.
yeah,
So that's how you're taking the trades from the top of the
of the body.
body.
Yeah, like I'm going to show you ahead how these are just anticipations, but there is a way to get more confirmation on taking an entry. There is a way you have
Okay.
to move your entry to from higher time frames to lower time frames to reduce your risk. And also it depends on the trend, some stuff like that. Like we are going to look at everything. I wanted us to go step by step so that like I cannot confuse you.
Okay, sure.
Uh, okay. So there is also something else called called hidden structure. Hidden structure. In our hidden structure, it's more like a breaking test and more like a hidden invalidation. But it's something that it's very accurate and I use it a lot. It's like this. Let's say we are we're in a downtrend, we're in a downtrend, and when we are in a downtrend, we expect price to come to retest our our break and retest structure. Okay.
Okay.
So most of the time when price comes to retest break and retest structure, it usually comes at the same time to respect something. Any I mean anything we know. When I say anything we know, that means like I'm talking about new invalidation X, structure retest, anything we know in this strategy that could be around here
Okay.
in smaller time frames. Let's say this is we're in a daily time frame. Let's say you find a structure that is right here on the 4 hour time frame, or an hour or 30 minutes or 15 minutes. So that's when we anticipate price to come to respect our hidden structure and price to continue making a way go another low going down. And ahead I'm going to show you like when to use a hidden structure and when to use in a hidden invalidation.
Hidden validation.
Yeah, hidden invalidation. We usually use hidden structures when you don't see a hidden invalidation. Sometimes price can move in an impulse way, like right here, and you see no hidden invalidation. In price, that's when you start anticipating for a break and retest or a hidden structure right here.
Okay.
Yeah, so let's get to the charts. Though sometimes you might have a hidden invalidation here and also have a hidden structure. In
Instructor.
place tends to respect one of those. So let's try. Okay, let's look for examples. let's try to work an example. Maybe right here. We try to see if
Okay.
we now we may get an example. This is our break-in test, and at the same time we have our hidden invalidation right here. That's our hidden invalidation, and at the same time we can let's look for the hidden structure, because like we are talking about the hidden structure right now. So like in the 1 hour time frame, right? We are going to go low in lower
Yeah.
time frames. Let's go to 30 minutes. Going to 30 minutes time frame. We have our first anticipation here. We have a breaking retest entry. Or then when you go to even lower time frames, okay, we don't see anything. We just see an impulse. Then let's say we go to the 5 minutes. 5 minutes time frame. And on the 5 minutes time frame, we got our first entry here. We have our first entry right here. And let's say let's go to the 1 minute time frame. This trade, we started looking at this trade from the 1 hour time frame. I think after here we have
Yeah.
to look for a trade from a higher time frame, so that we cannot go too deep into these small time frames. These small time frames are very noisy. That's why I don't like trading them. They are too noisy. So till now we have a structure retest there, then we have a break and retest right there. We also had a structure retest on the 5 minutes time frame. So price went and took its retest on this break and retest structure on the 1 minute time frame. So let's look for more examples on higher time frames. Okay, you can check here. Okay, this is our break and retest structure
Okay.
on the weekly time frame.
Okay.
So like we are going to look for entries right here down, our hidden structures, possible hidden structures here down. For I mean, we are going to look for the possibilities where these entries were taken, and I think they
Okay.
restricted some hidden invalidations. So let's go on the daily, the lower time frames. And when you go to the daily time frame, we find that price had a structure retest right here. So we are going to start slowly making top-down analysis from higher time frames to lower time frames. Okay, so this is our daily. This is our daily hidden structure. That's our daily hidden structure. Then we're going to go in lower time frames. Let's say for hour. In the 4 hour time frame. And that's when we realize that we also have another structure here down. We have a new, this is you can just call it invalidation X. Invalidation X, because it didn't break. It happened before the breaking of the structure.
Okay.
Invalidation X. Invalidation X. And at the same time, we can see we had an invalidation right here, a small invalidation. Can you see it?
Yeah, I can see this.
Yeah. Okay, we had a 4 hour invalidation. So remember, like all of these entries are on the weeks. We are going to put them on the bodies when we reach on the 1 hour time frame, because that's where our entries will be. That's where our entries will be. So let's say we're in the right now we're in the 1 hour time frame. We're in the 1 hour time frame, and we can put this entries right here, also here, and right here it was right here. It was here. It was right there. So we
So
can
for
for
each of these trades now, this 4 hour invalidation,
yeah.
4 hour invalidation X, and the 1 hour 1 day hidden structure,
Mm.
where would our supposed SL be?
Uh we are going to discuss about that. Okay, let's pass through a little bit on the stop loss. Okay.
Okay.
Let's say okay, let's finish here, then we go to the stop loss. This was
Okay.
our
Okay. Let's just
entry.
finish.
Yeah, this was our entry.
Okay.
Then price came to retest our hidden structure. And at the same time, it broke the break and retest structure. That means, like, if I would have entered in this trade, okay, it was a right trade, but it was even more risky. Get it was even it was even
Yeah.
it was risky. So the perfect entry was here down. Okay, when we go to let's talk a little bit about stop loss, where we usually put our stop loss. Um, on the case of the stop loss, it's like this. Let me look for a structure that has been retested. Let's talk about this structure right here. Okay, like we are anticipating for price to come to retest this structure, and if price
Okay.
would have broke this structure right here, it would have been an anticipation that price has shifted the trend, not so. So our stop
Yes.
loss should be above this level, should be above this price level, above this candlestick, whereby it should be above, but not too much, not very far. And I think it shouldn't be far. Yeah, it shouldn't be far. The way I put my stop loss, I may put it, let's say, like somewhere here. somewhere here or somewhere here, because I know if price has broke this structure, this structure has been invalidated. So there is a big possibility of price continuing to make a continuation of more highs. So let's say I can do like this. Let me put, let's say, my stop loss right here, and that's a stop loss of 10 pips. That's a stop loss of 10 pips, and let's say okay, we are going to talk about the take profit later. We're going to talk about the take profits later. Let's say here I can put a stop loss of 10 pips. Let's look for another examples. Let's look for other examples. Okay, let me answer you the question you asked me yesterday. The question you asked yesterday, it was about the invalidation that that happened here. Then you are like asking why was it low? Why the candlesticks were somehow far? Like this is our
Yeah.
invalidation point, right? So what I did, I went to the 1 hour time frame, because like most of my entries are on the 1 hour time frame, and I my entry was here down. My entry was there down in my stop loss. I kept my stop loss here, somewhere here, whereby whereby it was a stop loss of something like 17 pips.
Okay.
Okay. Um. So okay, let's proceed. Let's proceed. Let me look for other examples for more examples. There's also this trade right here. This structure retest. And this structure retest, you can let's go to the 4 hour time frame. Okay, let's just go straight to the to the 1 hour time frame where the entry was. On this situation, price came to retest both the the invalidation and the new invalidation. So whoever took any of these entries was price respected. Price respected it. So, or let's say here, let me anticipate on this on the last one. I knew like my invalidation point begins here and ends right here. Not so.
Okay.
So
Yes.
my stop loss was supposed to be something like 3 to 4 to 5 pips on top of that, because sometimes, especially if 75 has a trend of retesting more than the anticipation of the price it's going to retest. It can even go something like extra 5 to 6 pips. It does that. Even yesterday, it did the same thing. There's an anticipation I posted on the community. Did you see it on the V75?
Yeah. Yes,
Yeah,
this
it respected the second entry, but it was a huge week. It was a huge week. So let's say here, our stop loss, let's say it could be like somewhere here, whereby that's a stop loss of something like 11 pips, or something like, if you go too much, you can make it something like 15 pips. Most of the time, I even put a stop loss of 5 pips. Sometimes even a stop loss of
okay.
5 pips. And there's some situation you can even put a stop loss of 3 pips. Some situations, depending on the market structure. If the price doesn't have a huge week, then it's possible for the stop loss to be more or less. So till there, if you you click. Hello.
I'm here. I can hear you.
Okay. I think we are done with the structures. What you're supposed to do is to make some more practice on those structures I told you today, and also we are going to look on the market structure, how to determine trends, how to know if this is a downtrend, and where is this trend going to make a reversal, and where to take a pullback, where to enter a main trend, and which possibilities show you that this price is about to change its trend. So
Okay.
yeah, let's make some examples here, because I think this is more clear because it's white.
Yes.
Okay, let's say we are in a downtrend. The way we're in a downtrend and price is it's moving like this. So as long as we have broken this structure, our first anticipation will be on this structure retest, and our new invalidation. Most of the time, price doesn't respect the invalidation when we have a new invalidation. It's very rare. So this will have two anticipations. So price may break our breaking retest and go for our new invalidation, and price creates a new low. After creating a new low, price comes to respect our breaking retest structure and creates a new low going down. This is just an example to make you get familiar with this strategy in different situations. So let's say price may create a pullback to go and retest this invalidation right here. You get, and
Okay.
yeah, you may get a low going down. My main point is, like, you have to use all this knowledge you have to get entries. Like you have to use all this knowledge we talked about, the invalidation, the hidden invalidation, structure retest, hidden structures, and all of that stuff.
Generation X.
Yeah. So also another thing you have to, I think we should talk a little bit about that take some about our take profits. About our take profits. About our take profits. Before knowing about where you're going to take your take profit, you have to know more about the trend. You have to know the trend first, why the trend direction, in to do this, you have to, let's say we're in an uptrend. Then price breaks structure, comes to retest, let's say, our invalidation. After price retesting our invalidation, we know that we are going to drop, to create more lows going down, not so. So if price drops and breaks this structure, we already know that we are in a downtrend. It's a beginning of a downtrend. So we are going to look for more possible sells. So like we may get an entry right here. We may start anticipating on this breaking retest. We can also anticipate on this on this invalidation X. So you may say like price may reverse, come to retest our breaking retest structure, then price continues to drop. And when price drops, price may even reverse and come to retest our invalidation structure to create another drop. You get? So let's say at the same time, okay, let me show you possible pullbacks and where to know like this is a pullback or this is an entry to a main trend. It's like this. Let's say we are from a downtrend. Then from a downtrend, we broke structure. And after breaking this structure, price came to retest our invalidation point. After price respecting our invalidation point, price tries to create more highs. So we already know that from now on, we're in an uptrend. Not so. We're in an uptrend. And if price comes to retest, let's say this structure retest right here, we will have a confirmation that this is a pullback we are going to trade. So if this is a pullback, price is going to retest this pullback. So there is a possibility for the price to come to retest our breaking retest structure or our hidden invalidation or our new invalidation. You get? So price may retest here.
Okay, but like my own is how would you know which structure it is? Because as far as going up, it's past every test.
Yeah.
It's past this first one. Yeah.
No, it's not supposed to be the first one. What you're going to look for, you're going to look at the structure that it's from a higher time frame. Structures from higher time frames are more respected than structures from lower time frames. Okay, this structure here may be, let's say, from the 1 hour time frame. I think after here we're going to look at the charts. Then yeah. So this price may come and retest here. Then you just know this is a pullback. So you're going to look for a continuation to the main trend, whereby our possible entries are 3. Price may just come and retest our new validation, then create a new high. So like if this is your entry, level, so your TP may be here, here, or here. So let's say for me, what I do, I don't usually press my TP straight away, like on the markets. I don't. So what I do is I wait for the price to reach my take profit, then wait again for the price. Like I'll be looking if the price is going to break that structure or respect that structure. If the price breaks that structure, I'll continue to hold to the next level here, our new our hidden invalidation. Then if price breaks this hidden invalidation, I'll continue holding. Let's say I'll hold till here. Then if price reaches here and price respects, I'll just see the candlestick pattern. I'll just see the candlestick pattern price respects this structure here, then that's when I'll take my profit and take another buy right here. And also at the same time, there's something I want to show you. There's a confirmation we use. There's a confirmation we use on this strategy before taking an entry. Let's say,
Okay.
let's go to the 1 hour time frame. Let's say this is in this strategy, you can use pending orders, or you can use candlestick confirmations. When I'm talking about
Okay.
candlestick confirmations, like you should take your trade after. I told you that most of our trades are in the 1 hour time frame. In the 1 hour time frame.
Yeah.
So let's say let me look for a nice example. So let's say price price has come to our entry.
Okay.
Let me look for the. Let me show you this example. Then I'll show you the next example. Then I'll tell you the difference. Because like everything has its benefit and effect and side effects. I mean negativity and stuff. So you may be like let's say this is our entry. The confirmation I'm talking about, you have to wait for this candle to close. And this candle is you're not just to wait for it to close, you have to wait for the candlestick for the candlestick to close under our entry, but the wick should be above our entry. Like the wick should tap our entry, but the body should not tap
Hello.
our entry. Like the candlestick should close down. Have you get the point? Like let's say
Okay, sir, can you come again? The network was shaking, so I didn't hear you at that point.
it's okay. Let's say this is our entry. This is our entry. We were anticipating
Okay.
price to drop and come to retest this entry right here. So what
Okay.
another confirmation we use, we can wait for price to come and retest this entry. And after retesting this entry, this candle that has retested our entry to close, you get this candle should
Okay.
close. And after this candle closing, it should close when hello? Hey bro. Hey, hello? Hey bro. Do you hear me? Hey bro. Hey bro. Hello?
I can hear you. I can hear you. The network was a bit shaky. I can hear you now.
Okay, then let's proceed. I was saying, like, all you have to do is to wait for Our anticipations are here. Anticipations are here. We were waiting for price to come to retest this structure.
Okay.
So what you're supposed to do is to wait for this candlestick to respect our entry, and after respecting our entry, this candlestick should close below our entry. If this candlestick close above our entry, let's say here, then you are not supposed to take that trade.
Okay.
Do you get the point?
Okay.
Yeah, you're
I
not
get the point.
yeah, you're not supposed to take that trade. So like remember this this is the 1 hour time frame. This is the 1 hour time frame, and you are supposed to wait when this candlestick has just closed. And when this candlestick has just closed at the same time when this candlestick has closed, that's the time you're supposed to put your entry.
To
That
take the
means,
trade. Okay.
yeah, that means you have remember this is the 1 hour time frame. Like every candlestick opens after 1 hour. Also,
1 hour.
yeah.
Yeah.
So you're supposed to place your trade when it reaches, let's say 5 o'clock sharp, 6 o'clock sharp, 8 o'clock sharp. So
Oh,
like
okay.
to
Sharp.
yeah, you have to wait at at that at that at that time I told you. So like so when you press your trade at that time, that means your trade will be somewhere here on top of this on this candlestick where just straight away where this candlestick has just opened.
Opened.
Yeah. Have you got the point?
Yes, sir.
So let's say when something like this happens,
It's a can you do something for me now?
yeah,
Like this, where your line is, can you just break it down how you take a break and because this is an example of a break and so just give an example and break down.
I don't hear you. You're saying
I say where your line
hmm, here,
is right now, where your horizontal ray line is
yeah.
an example of a break and can you just break it down for me? Can you just break it down like how you break it down using the hidden structure
Oh, using
or
the
just get
yeah, I
a
get.
clearer view of it also?
So like here we are in the
Okay.
1 hour time frame. We're going to look for this example right here for the break-in retest. We're in
Okay.
the one we're in the 1 hour time frame, and the break-in retest was right here. We're on the 1 hour time frame. We're going to go to the 30 minutes time frame. We're going to go to the 30 minutes time frame, and we don't see anything on the 30 minutes. So we are going to go more low on the 15 minutes.
Okay.
And on the 15 minutes, we see a hidden invalidation right here. You see a hidden invalidation right here. So price went to retest the hidden invalidation in the 15 minutes time frame. You got it. And
Yeah.
at the same time, this is an invalidation whereby price came to retest it the second time right here. And also this is another example I can tell you about candle body confirmation. That thing I told you is called candle body confirmation.
Okay.
Yeah, this candlestick closed under. I mean closed above. So it respected our candle body confirmation. So your entry would have been here, but at the same time, price went against us, and then reversed, and it supported our entry. So things like this usually happen, and it's normal. So like just don't get surprised when something like this happens.
Okay.
Yeah, I told you about the side effect. Like it also have its side effect on the trades you'll be taking. The side effect is that like you'll be having possibilities of getting late entries, late entries and high risk entries.
Yes.
You'll be having that possibility. Because like let's say right here, if we say we are waiting for candlestick confirmation, remember this candlestick, this is the candlestick that made the confirmation. And this candlestick opened from here,
Contact.
and
Yes.
it closed very, very far. This candle closed here.
Wow.
Yeah, very far. That means like if you enter this trade right here, your stop loss would have been huge. Let's say from here to somewhere here to
Yeah.
that's more than that's 108 pips. Do you know to calculate pips in index?
No, I don't.
Okay, let me show you. Okay, let's say um, we are trying to calculate pips from you're supposed to use this price range at this price range, and not even the price range. You can use let me show you first. Let's measure pips from that entry there to here down. So what you're supposed to do, you have to take these first digits, these digits on your left, whereby it's 5, 2, 1, 5, 8, then 4, 3, 9, 9, 4 times times the number of lot size you're going to use. So let's say you have used we are going to use 0.001. 0.001. That means if someone would have entered this entry from here to here, that's $52. That's $52. And if you want to measure it as pips, in terms of pips, then for me, I usually calculate this in terms of dollars. Then after calculating it
Okay.
in terms of dollars, we all know that like $52 with a minimum lot, that's 520 pips. That's 520 pips. You just add 10. But if you are calculating pips as pips, then you have to use 0.01. In the number that you got, you have to add a 0. That will be the number of pips. So if you are trying to calculate your risk, let's say that's let me show you another example. Let's say we are using this. Our our TP is there and our stop loss is here. You use the same method. You take these first digits, 4, 9. That's 4959, 59.7349. 0.049 times, let's say 0.00001. That means like if you've used 0.01, your risk will be $4 from this from from your entry to your stop. Your risk will be $4, and your take profit will be this.
Okay.
And your profit will be 0.001. Your profit will be $49. So you'll be
49
reaching
point.
$4 to get $49.
Okay.
Yeah, that's how we calculate pips in index.
Okay.
Yeah. About our candlestick confirmations, it's like that. It's having that's the side effect of it.
Okay.
Yeah, and I think for today, it's nice if would have I give you some time to practice. Then on our next lesson, we are going to carry on, and I'm going to show you how I really do, how I really make analysis on different pairs, and how I enter my trades, how I take my profit, how I press my stop loss, how I do my risk management, and all other kind of stuff that I do when I'm trading.
Okay.
Yeah. Now I'm going to send you this video